Every asset can be tokenized. And I'm not the only one saying this.
I do believe we're just at the beginning of the tokenization of all assets, from real estate to equities, the bonds, across the board.
In this video, I'm going to break down what tokenization is, its potential, and especially what it's going to mean for XRP, the XRP Ledger, and XRP's price. So why can tokenization be so big? Like, what makes this the next thing? Well, the global stock market total worth right now, toward the end of 2025, was around $150 trillion. Bond market, that's another $145 trillion. Real estate, $400 trillion globally. If you add in commodities, private equity, art, collectibles, now we're talking about $700 trillion globally in asset valuation. And right now, most of these assets are illiquid. They're slow to transfer, and they require lawyers and brokers and escrow agents and mountains of paperwork just to be able to exchange that value. And they're expensive to trade because of all these additional fees and frictions, and they make it inaccessible for the average person in many jurisdictions to even participate in any of this because they don't have the financial means or the infrastructure for them to even have access to it. The current system is broken. I mean, let's just look at SWIFT. Okay, the SWIFT system moves trillions of dollars a day, close to $5 trillion daily, and it works like a relay race. Banks hand off instructions one by one, checking details of each step. Even Larry Fink said this. He's compared routing emails using like post offices. That's how fragmented and slow our banking system actually is today. Transactions should take seconds, not days, and billions of dollars are sitting frozen in these Nostra Vostra accounts. They're required for this archaic way of settling. So, again, we showed the video of Larry Fink at the beginning, but he's talking about everything moving on chain here in 2026. Every stock, every bond, every fund, every asset that can be tokenized will be tokenized. And right now, the largest players are investing in these markets to be able to move to real-time settlement. Transactions currently take days to clear, and this would move them to clearing in seconds. McKinsey's projected $2 to $4 trillion tokenized here in the next 4 years by 2030. And Boston Consulting Group and Ripple have both projected 18.9 trillion on chain by 2033. Standard Chartered even came out and said they're projecting as high as 30 trillion by those timeframes. So needless to say, all of these financial institutions are leaning in right now and telling you what's coming. So why do these numbers even matter? Well, if tokenization captures just 5% of the total global assets, that's $35 trillion on chain. If they were to capture 10%, that's $70 trillion on chain. Today, we currently have about 15 to 20 billion in total tokenized real world assets, or RWAs. That's globally. You're not even sniffing market penetration. We're at less than 0.01%. So that means there's a ton of runway for growth here. It's massive. And I think that we're going to see close to 80% of all global assets on chain in some way by the end of 2032, just 6 years away from now. But let's ask the question, why would they even want to tokenize any of it? Well, for that, you have to break it down to what this fundamentally is. What is tokenization? Tokenization is the process of representing ownership of real-world assets through a digital representation on a blockchain. Instead of paper deeds or certificates or titles sitting in filing cabinets or a vault or a safe, ownership would be recorded as a digital token. This would be traded 24/7, 365, and it can be divided up into fractions. So look at Berkshire Hathaway as an example. You need $500,000 just to buy one share of Berkshire Hathaway. Well, not everybody has that to be able to buy a share. So wouldn't it be nice if you could buy a 10,000th of a share, 100,000th of a share, 100th of a share, anything to be able to bring down the barrier to entry? And I think a lot more people would be making investments in Berkshire Hathaway if that was the case. That could be applied across all of these different asset classes. So the efficiencies are going to be fantastic for all of this. We're going to break it down by asset class here and the different benefits that they're going to have for each. So let's look at securities as an example. Tokenized stocks. Like I said, fractionalization of these is going to be huge. But on the back end, right now, stocks settle T+1. What does that mean? Well, clearinghouses and the brokers, you think you're trading real time if you're using Robinhood or Webull or one of these trading apps. stops. It's not that way. It shows that you have the stock, but they still have to clear that trade through the DTCC with one of the clearinghouses. There's 6 clearinghouses, and there's a ton of different exchanges that people operate on, but they don't have an accounting mechanism across all of that to be able to figure out how much stock is held by each person. They have an idea, but it's archaic. It's not real time, and it doesn't settle instantaneously, even though it looks like it does on your side. That money is fronted by the clearinghouse to the broker, and then they get the money the next day with T+1. And they just moved that, not that long ago. It was May 28th of 2024. We even saw that transition take place from T+2. So here in 2026, we've had NASDAQ president there and New York Stock Exchange, as well as Paul Adkins of the SEC, all talk about instant settlement on the back end of the stock market. And you could do that without tokenizing stocks, but the accounting mechanism across everything to be able to make sure that you're not overselling stocks, like we saw with GameStop and AMC during Wall Street Bets and that whole debacle, that illustrated exactly how old the back end settlement of these markets really are. So tokenized settlement would happen in seconds. Let's say, again, real estate as an example. Instead of closing in 30, 60, 90 days on a house, it could be somewhere between 3 and 5 days. Instead of weeks of paperwork and escrow and legal fees, all that could be distilled down to a very quick transaction. And those frictions and those costs could be reduced substantially if those things were happening on chain. Think about a HELOC. They've already proven this out in the eastern part of the world. Ripple's piloted it with a couple different banks and institutions over there, where they've issued HELOCs on chain. And it took a couple days instead of a big long process. So that is the benefit of tokenizing these asset classes. And you could transfer ownership maybe at some point in the future all the way down to minutes rather than, days even. But we're going to walk before we run here. So the other thing that I've seen a lot of people with anticipation about is going to be private equity. Right now, most of the time you're going to have $250,000 minimum on private equity, just to be able to have direct ownership on a cap table if you're going through one of these brokers. If that was fractionalized and there was a secondary market for these shares and you just had to be accredited or meet certain credentials in order to participate, anybody and everybody might be able to participate for far less money. It would be much more liquid than it is today. Right now, there's always going to be parameters around securities laws and latency between when you purchase it and when you can resell it on the secondary market. I think that those things are good in order to maintain stability in these markets, especially while they're illiquid, but even more so post the implementation of tokenization. And I'm probably different than most people around, the actual regulation of this stuff. But it'd be great if people could get in for just $100 or less into some of these private companies. Because not everybody is accredited, and maybe they don't have as much disposable income as somebody else, but they see an opportunity in the market. They feel like, look, this is going to do really well. I'd like to get access to it. Really, you're looking at it kind of like the stock market was in the 1920s. Before all the regulation and red tape and all that was in place, many people were able to access these things and get the upside that they just don't have access to today. And that's what this does. It democratizes access to this. So what else could it benefit? Well, you got real estate like we talked about. It's commercial, residential, raw land, industrial, all these different types of real estate that people want to get access to. You'd have bonds. We've already seen the tokenization of treasuries. I know people looking at tokenizing muni bonds. You have corporate bonds and corporate debt that could be tokenized. You have stocks, equities like we talked about, commodities, gold, silver, oil, other commodities, corn, futures on those contracts and derivatives, private equity, venture capital funds, both of those, arts, collectibles, diamonds, precious gems, carbon credits, intellectual property. Really, what it comes down to is anything and everything that has value, that has a mark to market, you could tokenize. So why do institutions care about this though? Well, for them, it's going to make things faster and cheaper, just like it will for you. Instant settlement atomic swaps eliminate counterparty risk, which is huge for banks and sovereign nations at this point. You'd also have 24/7 markets, which means no more waiting for exchanges to open or banking hours or all these things that we currently have in today's system. And you're going to get 2/5 of the year back that you can put capital to work. Nights, weekends, holidays, none of that happens right now, but on chain, it will. It opens up fractional ownership to these assets for more investors, democratizing access. And then you're gonna have higher valuations on stuff because it's accessible to more people. You also have programmable dividends and interest payments via the smart contracts. And you know that they're going to the right person. They can be clawed back. There's all these things that today can be a little funky that can be programmatic on chain. And the whole point of that is the transparency. You have transparent ownership records, and it's going to reduce the fraud that exists in financial markets today. And all that alongside those things, you have lower costs, you eliminate intermediaries, and like Ondo's doing right now, they're creating access globally to even liquid markets that they've moved on chain so that there's no geographical restriction. So, but how does this help XRP, right? Like there's all these blockchains. Why would they choose the XRPL and use XRP as an intermediary or bridge asset when they could choose some of these other ones? Well, there's a lot of different blockchains, like 50,000 blockchains today. And I think that's going to consolidate down to close to 100 or less networks in the near future. But many of them are already prominent and have a lot of liquidity, including Ethereum, Solana, Avalanche, Hedera. Why are they going to choose the XRPL to settle the back end of these markets? Well, speed and cost. The XRPL settles in 3 to 5 seconds. Transaction fees are under a penny and often fractions of a cent, depending on how big the payments are. It has a DEX built in, so it routes liquidity in the most efficient manner, oftentimes through XRP, depending on how much liquidity is available, but it could settle through other things as well. Other networks don't have that. And compared to Ethereum's gas fees, those can spike as high as $50 per transaction when the networks congest, and higher, depending on really where things are at. And then separate to that, let's look at Solana. Well, Solana's fast, and that's great. And it's scalable, but under stress, it's had multiple outages over the past 5 years. The XRPL has only ever been paused twice in its entire existence and never actually went down ever since it was created in 2012. That's almost 14 years of running strong with no issues. And the downtime requirements for global infrastructure, you guessed it, never. It can't go down. So you have to have something that's battle tested and built for this application that doesn't have some of the issues that are presented on other blockchains. And the XRPL is being built for finance today. It's designed specifically for payments and asset exchange. Again, going back to the DEX, no other network really has that at scale on the main net. There's derivatives and layer 2s and other things for people to be able to facilitate it. But being built into the core infrastructure, second to none. It's got native tokenization capabilities, which were part of the original design. You got a multi-purpose token, which is perfect for private equity when you have share classes with different rights. You have digital identity, you have credentials, which allows people to participate in certain ecosystems if they meet certain requirements. You have zero knowledge proofs coming here in 2026. You have permission domain and permission dexes, again, gating certain capabilities on the network or participating in certain infrastructure only if you have certain criteria to do so. All of this governance is required when you're dealing with financial institutions. And it's not just a general purpose blockchain trying to add financial features. This was purpose built for this exact reason from the jump. So let's talk about that compliance infrastructure that I just mentioned. You got robust compliance tools integrated into this blockchain. Financial institutions can tokenize assets without having to build a compliance framework from scratch. With permission DEX, the upgrade allows regulated trading environments. And back to the zero knowledge proofs, those are going to change the game here in 2026 for financial institutions, looking at Boundless implementing that at scale on the XRPL. This matters because banks will not touch this infrastructure if it doesn't meet the regulatory requirements. So on that topic, what does regulatory clarity look like for XRP? Well, it's really one of the only assets here in the US that is set up for success until the Clarity Act passed. The SEC's case against Ripple ended in August of 2025, and on July 13th of 2023, XRP was designated not a security by the judge in that case, basically making sure that it's never going to be an issue here in the US. Along with the Genius Act passing in July of 2025, its stablecoin regulation, again, Ripple a leader there with RLUSD, paving the way for that to be used on the XRPL on the EVM sidechain. So all of this regulatory resolution has removed any uncertainty that's kept institutions on the sidelines from using XRP. We're just waiting on the volatility to come down, and we're waiting on the liquidity to go up. So alongside that, here in 2026, we've had united guidance from the SEC and the CFTC also designating XRP a commodity here in the US. And you've had other jurisdictions come out, like Japan, designating XRP a financial instrument. So the last thing I'm really waiting on for full clarity on this, even though we have FinCEN saying that XRP is a currency back in 2014, 2015, is the BIS. When the BIS comes out and gives XRP a designation, I think it'll be regulated tier 1 asset if it is a high stable price when they give that designation. And that's going to happen here in Q2 of 2026. Track record shows the XRPL has been operating for over 13 years without any issues. It's processed billions of transactions without a major security breach. It has over 300 financial institutions connected to RippleNet, partnerships with SBI Holdings, Santander, and Standard Chartered. So this is proven infrastructure. It's not like people are experimenting with this technology. They are about to use it. So as tokenization reshapes the entire financial infrastructure very quickly, it's going to be important to stay up to date and prepared for what's coming. You can check out Beyond Broke Community, where we break down these developments daily and separate the noise from the signal and what actually matters. So if you want to stay ahead of the curve, check the link in the comments below, and we'll see you there in the mastermind. Okay, so we talked about what tokenization is and why it's likely it's going to happen on the XRPL. Let's talk about what actual traction the XRPL really does have today, because it's a lot. So let's look at the numbers in 2026. Well, the XRPL now hosts $2.3 billion in tokenized RWAs, or real world assets, up from 991 million at the start of this year. That's 1.3 billion added in just a few months. That's more than all of 2025. Here in 2026. The XRPL holds over 15% of global tokenized commodities, and tokenized assets grew from 111 million to 1.14 billion so far in 2026, as an aggregate total of things moving on chain. In 2025, the XRPL grew 2,200% from 24.7 million at the beginning of the year all the way to 567.9 million at the end of the year in 2025. So what major institutions are actually using this technology here in 2026? You've got a Euro stablecoin that's been launched, which is EURCV. That's been launched on the XRPL already this year. You have Brazil issuing their stablecoin on the XRPL and settling value with RLUSD. You've got Avea investors. They've announced a tokenized partnership with Ripple. You've got Deutsche Bank integrating Ripple's technology into their stack for cross-border payments. And SBI Holdings is issued $64.5 million worth of tokenized bonds with rewards in XRP on the XRPL. This is the first of Japan's regulated markets for tokenized assets. And just here recently in March of 2026, the Federal Reserve, the OCC, and the FDIC issued joint guidance clarifying capital treatment for tokenized securities. And like I said, we know this is coming here in 2026. We've had NASDAQ, we've had NYSE, and we've had the SEC all telling us that we're going to have tokenized stocks and real-time settlement for the stock markets here this year. Tokenized securities will receive the same capital treatment as traditional security. The capital rule is technology neutral, which means the technology used to issue and transact doesn't impact the capital requirements. So there's no distinction between permissioned or permissionless networks, given in this framework, but tokenized securities can qualify as financial collateral under the existing rules, which is a big deal for cross-collateralization and prime brokers and how all this is going to work for Ripple Prime and what they're building. So banks can now hold blockchain-based securities without any additional capital penalties. This removes the frictions. This clarifies what they need. This removes the barrier that's kept institutions out of experimenting with tokenization or not even looking at it at all. It effectively gives the green light for banks to adopt blockchain infrastructure, which many of them have been building in the background for years. So what are some other things that we've seen? We said there's a lot of RWAs on the XRPL. Well, you've got Dubai real estate that was tokenized in 2026, and the land department there has 2 phases where it's going to be tokenizing real estate on the XRPL. You got 5 million in tokenized properties that are now tradable on a secondary market. So again, a pilot program, but it's traction nonetheless. This project has $7.8 million worth of tokens that represent 10 different properties, and all the transactions executed on the XRP Ledger, and it's secured by Ripple custody, probably the acquisition that they made with Palisade last year. This is part of Dubai's $16 billion roadmap to tokenize 7% of its real estate by 2023, which I think could be escalated if things were to move the right direction and there's more liquidity in these markets. But first, the governments need the property authority in the Middle East to use the public blockchain for the titles and deeds. And I've talked about this in the past, but that's the friction. You've got all these counties and courthouses here in the US. You're probably gonna have to subsidize them with something in order to get them to move the physical titles into digital representation of those titles on chain. So the tokenization of the underlying asset itself, or the real estate, I think is further out, but I do think you're gonna see securities issued like REITs and other things that hold the underlying real estate or that ownership that people are getting access to much sooner. We also have tokenized diamonds on the XRPL to the tune of $280 million with plans to expand. Just Tokens, or JMHW Energy Tokens, has issued $861 million This represents megawatt hours backed by Latin America's energy company, all on chain on the XRPL. You also have, you guessed it, US Treasury products from Ondo in multiple marketplaces to the tune of $300 million on the XRPL. And the adoption is not slowing down. Ondo's short-term government bonds grew 293% since January of 2026. That's a big move here in just the first quarter of this year. And then last but not least, y'all's favorite, besides XRP, RLUSD, which is Ripple stablecoin, which has $1.56 billion tokenized currently, with $384 million of that on the EVM sidechain on the XRPL specific. And then last but not least, we've had Graham from Archax talking about bringing $1 billion of tokenized assets to the XRPL by the middle of 2026. And I'm pretty confident that they're going to be able to deliver on that. We also have the DTCC stepping in here, leaning in with Canton Network and their investment there. And also, like I've mentioned, many others saying that they are going to be moving to real-time settlement using distributed ledger technology here in 2026. And that's apparent because the SEC granted the DTCC a no action letter on December 11th of 2025. They have a 3-year pilot of tokenized securities supported on multiple blockchains. But again, I think that 3-year pilot stretches back to, you guessed it, Project Ion that was finalized in August of 2022 with R3 and the DTCC. I think that's going to be primarily what they use, but we'll have to see how that plays out. Eligible securities include the Russell 1000 stocks, US Treasuries, and major ETFs to start. And the DTCC handles the clearing and settlement for all US-based security markets. So based on everything that's happened and their timelines, what we're hearing is the pilot is going to be launching in the second half of 2026. And we are going to move to real-time settlement on the back end of the stock market. Sounds like Q3 this year. So again, why would they use the XRPL for this? Well, Corda, one primarily in Project Ion, uses XRP as their primary settlement mechanism. Because it settles in 3 to 5 seconds, the transactions are fractions of a cent. The built-in DEX, like we talked about, has been operating since 2012. The messaging standards to be able to facilitate this transfer are all ISO compliant, and it has proven reliability for over a decade, along with native tokenization capabilities. Again, the multi-purpose token that's been put on the blockchain allows you to be able to issue shares that are fungible for companies, but may have different voting rights or different capabilities or ways to participate in certain ecosystems, but are still fungible with one another. Where an NFT, if you issued an NFT for every single stock, it would not be fungible with the other shares within that company. So it's not tradable like you would want it to be, but you also still need some of the features of an NFT. Not everything participates the same way in voting rights. So the multi-purpose token is a huge lever that the XRPL has here, along with the regulatory clarity that they have as a commodity, the designation from the court case, and all of the other things that we've seen happen over the past 6 years. So what's this going to actually do to the XRP price? Because that's everybody's question, right? Well, every transaction on the XRPL requires XRP to cover fees. These fees are burned and they're permanently removed. That XRP is gone, no longer in the supply. So the more tokenized assets means more volume and more transactions. More transactions means more XRP gets burned. And more XRP gets burned means there's less and less of the supply. At today's rate, the XRPL would last for 50,000 years. There's only about, 5,000 XRP burnt at a maximum per day at the current rate. So you need something that's going to be long lasting, but you do want something that is deflationary by design, which the XRPL is. Now, there are going to be people that say, well, there's not enough liquidity in XRPL. Now, there's going to be a lot of people out there that say, well, they can't do it because there's not enough liquidity in XRP. And I would agree with that statement as it sits today. But as more assets are tokenized on the XRPL and trading volumes increase, once price is high enough to start facilitating that, that's going to be the backbone, and it's going to attract more liquidity. Liquidity begets liquidity, and the more liquidity on the XRPL means that larger institutions can start to participate. One of the correlations I could make here are like ETFs. So, we've thought about launching them. We've talked to Canary Capital and many others that have launched ETFs. And you really need to get to at least the $100 million mark before you can start attracting institutional capital, because no one pension fund or other institution can own more than 10% inside one of these products. And the smallest check size that they're willing to cut most of the time is around $10 million. So you can see how the math's there. 100 million, $10 million is the minimum they can cut. They can't own more than 10%. So you have to be at least 100 million before you can even start attracting institutional capital into an ETF. These blockchains are going to work the same way. You need supply and demand dynamics to drive the price to certain levels so that there's enough liquidity so that these institutions, when they move in, they're not the largest whale in the pond, and they can meet their regulatory and risk requirements in order to participate in certain ecosystems. So where does XRP sit in all this? Cool, more volume, more transactions, more real assets tokenized on chain. How does that benefit XRP? Well, XRP will serve as the bridge asset between these tokenized assets when they're trading value or sending from one place to another. Converting from tokenized real estate to tokenized bonds, guess what? It'd be routed through XRP. And you could exchange those two things directly in a marketplace. Today, as it sits, you would sell one into dollars and then use those dollars to then buy that other one. And you might even have to move that across marketplaces or providers in order to be able to get access to the other thing. Through the DEX on the XRPL, you can swap through XRP and settle in that other asset and exchange value. That's never been available for. It's like the ultimate barter system, if there is enough liquidity in XRP. So there's a ton of applications where this is going to be relevant. Nostro Vostro accounts are going to be removed. You got cross-border settlement of tokenized assets. All of that settling through XRP if there's enough liquidity in the token, and the DEX will route it that way with the issued assets on this network. It's going to create a full utility demand beyond just the deflationary benefit of the fees being paid in XRP on the network, which is huge. But again, we have to get to a price where this can even start to happen. And I think that's somewhere between $100 and $1,000 at a minimum that we're going to have to see for XRP before it can be used in this way. So in closing, tokenization is happening right now. And the XRP Ledger is capturing a meaningful share of this activity. I think it'll be the backbone for the financial system. So if you want to stay ahead of these curves and developments and discuss how to position you and your family and your portfolio around this institutional adoption, I suggest joining us in the mastermind. You can check it out in the links below. And if you want real professionals to be able to help you with your portfolio, your estate planning, your taxes, all the things that you're going to be dealing with post-liquidity event, if you're invested in the right assets, you can reach out to us at digitalfamilyoffice.io, and our team would love to meet with you and provide you at least a Rolodex of people that you can trust when you're dealing with this stuff. So until next time, stay curious, stay ahead of the curve, and we'll see you on the next one.